Good afternoon everyone. Today I'll give another public analysis in commodities. Earlier today I made the same video in Dutch and this time I'll explain everything in English. The commodities that we'll look at today are gold, silver, corn futures, WTI oil, so West Texas oil, platinum, soybeans, and lastly cacao. Let's begin. So the first commodity is gold, and what we see for gold is more or less this range that's better visible on the higher time frame. The complete explanation of how I got this range is something that I've explained in another public analysis, and I believe I did so at the very first English public analysis on commodities. So not only for gold but also for the other commodities, and I even went through all of them in this list. If you're interested in how I got these ranges, how I derived the important information, just check the older public analysis, because in this video I'll only check the last developments of the prices. So for gold, one of the things that I was interested in looking at is in the way the price developed just before and just after the strong low, and it's better to look at it on the hourly time frame. If we look at the way the price developed before the strong low, we saw that there was a downtrend and it was formed with lower highs and lower lows. And at this specific low, we see that the next high was a higher high, and it was even greater than both of these swing highs. After that, the pullback was around this daily level, which was in essence a higher low since it's higher than this strong low. And after that it bounced again on the daily and again, and currently we're between these two 1 hour levels. And what I find interesting is to look at the way gold would develop around these price levels. We see that the price is again below the 1 hour time frame, the 1 hour price level. And one of the things, the reason I put an alert right here, even though the price crossed, is because I saw that price crossed to the 1 hour level. It bounced off a little bit, which could be good, but I want to see a better confirmation. So what I would like to see is for price to bounce more convincingly, take out a swing high that's formed before this low, and then have a pullback around the 1 hour level. Doesn't even have to bounce on it anymore, but it just needs to have a certain momentum, a certain reversal of this downtrend on the lower time frame. And if I see this, then I may take a long with having this range in mind. So it's just something that completely depends on how price develops on the lower time frame. However, if it doesn't happen, and if price simply goes through this 1 hour boundary, then price could fill in this fair value gap that is better seen on the 4 hour time frame. So it's this particular, let me see, I made it as such, like there are these two particular fair value gaps, but I put in them together in one box simply because the box in between is so small, and there are also no visible volume imbalances as far as I'm aware of. Yes, exactly. No specific volume imbalances to keep in mind, which led me to make a single box, larger box, excuse me, instead of two smaller ones. In essence, it wouldn't matter that much. What's important for me to see is that there is a fair value gap that's yet to be filled. In other words, price went up relatively high, relatively quickly, and the expectation would be that this gap would be filled given that price doesn't go or follow this range anymore. So in other words, we would like to see either a more convincing reversal on the lower time frame and going into an uptrend, or price to break down under this 1 hour level and fill in this fair value gap. After that, I would love to look for a possible long opportunity around the daily level, simply for a daily bounce and possibly a daily reversal. And for gold, the more ideal long setups would be simply if price went back into the bullish order block, and if if gold gives the opportunity to take a long at these levels, given that it's supported on the lower time frame as well. The next commodity we'll look at is silver. As we can see, from 2 years ago until now, silver moves in a specific range between these two order blocks, so this bearish order block and this bullish order block. The way I derived this range is seen earlier in one of the earlier public analyses, so I won't go through all the details, but I'll just explain what happens on the lower time frame. As we can see right now, silver is making a larger deviation below this range and is even still moving below this range as we're speaking. And if we look at the way price developed before and after the strong low, we see that before the strong low, the lower highs and lower lows were formed, and after it, higher highs and higher lows formed, so these swing highs got broken. And as of 2 weeks ago until now, silver moves into another price range on the lower time frame. And if we look at the smaller time frame, we see that silver moved away quite quickly when touching this lower boundary and didn't even fill this fair value gap at the beginning. But as of right now, both the fair value gap and the part where the extreme volume imbalance was present got filled with quite a lot of conviction, so quite the large volume candles. And as it appears, silver doesn't look to go back into the range yet. At least we don't see any indication on the lower time frame. So we see that it did moved up a bit into the range, but after that it quickly crashed quite a lot. And as of right now, we simply need to see how price develops. So earlier in the range, we took a trade around these levels, and we also took this fair value gap into account for the stop loss. And some guys even took this one into account. Personally, I only did this one with a tight stop loss, so to say. And for this particular moment, we saw that price did look like it wanted to move in the fair value gap. So we did not advise to take a trade right here. And after it moved away, there were some possibilities to see a reversal after the fair value gap got filled. Personally, I did not try to take a trade. For everyone that did take the trade, I assume that the take profit area would have been between the point of control and the 0.5 line, and that the stop loss would have moved accordingly, so with a trailing stop loss or a stop loss at break even. If you did that, it would have been paid out, especially since price moved away quite fiercely again and even went again below this fair value gap. Summarized, for now for silver, I'll wait until price moves back into the smaller range to eventually have another long possibility to go long for silver. And it might even be possible for silver to fill in this fair value gap as well, especially since there's also a part that has an extreme volume imbalance. And more than that is not something. The corn future is the next commodity that we'll look at, and as explained earlier, corn is in a huge uptrend since the end of last year until now due to the Russia-Ukraine conflict. And one of the interesting levels that I'm looking at is the weekly level in particular, especially since corn tend to stagnate there before making another move to the upside. And when I looked earlier at the lower time frame, I took a trade around here, just below the fair value gap and also below the upper side of the range, slightly below that. I explained about it earlier, about how I took the fair value gap into account. I took a tight stop loss simply because I did not want to have something like this filled in, especially with this having an extreme volume imbalance, as you can see. It paid out, and while I'm already out of the trades because my trailing stop loss got triggered earlier, if we look at the range that has been developed after it, we see that the range went on for a while. There was a liquidity grab above it, but after this grab, price moved quite intensely, excuse me, in such a way that it's broken the range and it's even below the point of control. So one of the important levels is this weekly level, as explained before, and at this level I'll look at how the price moves on the lower time frame, and if it bounces convincingly, it will be a great place to go for a long trade on corn. Next up is oil, West Texas oil to be precise. And for oil, if we look more zoomed out, we see the huge uptrend, and after which oil tended to move into a range. And as you can see, there was a fair value gap on the 12-hour on the first deviation of the gap, or of the range rather, so which was a huge deviation. And the gap that left behind did had a volume imbalance as well. And what we see is that the part with the volume imbalance got filled in. The rest of the fair value gap did not get filled in until now. And after it filled in, it moved down quite aggressively. For me, one of the things to look at is the assumption that oil moves or continues within the same range. So again, the assumption could be, and this is a huge emphasis on could, it could be that this deviation has been formed and that price may go back into the range and continues this range accordingly. This is something I'm looking at, especially since this break in market structure also took place on the hourly level. And what I would like to see is price to come back, fill this fair value gap, which has a volume imbalance as well, and goes below this, or continues with this structure and goes below this low again, back into the range. This is the ideal situation for a short on West Texas oil. However, I do want to have quite a tight stop loss because of the emphasis on how oil actually is in an uptrend on the higher time frame. So essentially it's a trade against the higher time frame. Despite this, I do believe that it's possible to look for a short on oil, especially since this volume imbalance has been filled, or at least the part of the fair value gap where the volume imbalance was present got filled, and because of the huge movement, or quite huge movement after this filling in. And if I would look at a trade setup, I can look at the take profits being on this part where the volume imbalance was quite extreme, and or even this part, which would be the fair value gap on the 4-hour, where also there was a volume imbalance present. In the ideal situation, of course, there would be such a huge downtrend on the lower time frame, so on 1 hour and below this, that there would be no reason to close the trade and simply trade along, going into the point of control, the value area low, and even into the bullish order block. In that case, it would be an ideal situation, given that the range would continue accordingly. However, for now, what I'm looking at are possibly these take profit areas, maybe this one as a third, And for the stop loss, I would look at a tight stop loss in such a way that the market structure has been in a uptrend again on the lower time frame, and therefore would invalidate this whole trade setup. And this is always what I'm looking at for oil. For platinum, we see a larger range formed on the higher time frame, which is especially seen well on the daily and the 3 daily time frame. And we see that platinum formed this range from September last year until now. And one of the things that happened recently was that platinum made a move to the downside, so had a deviation on the downside, so below this range, and it looked like it bounced off the weekly level and continued the uptrend. Personally, I was not able to take this weekly or to take this long opportunity because I didn't have time at the moment to look more in detail on the lower time frame. I hope you guys from Trias Traders were able to take the trade, especially since it was announced earlier, so it was a nice possibility to look for this development on the lower time frame. And if you did so, then price moved in your favor in a pretty large uptrend on the 4-hour time frame. Despite me not being in the trade, I do think it's a good thing for you guys to check where the take profits can be made for platinum. So if we look at platinum, we see 2 point of controls being marked on the chart. And as explained earlier in another public analysis, the reason I did so is because, well, first off, I looked at 2 ranges for where to look at volume profiles. So from this particular range of September last year until now, and also from a way larger range starting from January of 2015 until now. Then for both ranges, we see that the point of control, or that there were 2 price levels that were really close to the point of control. So one of them did have the highest volume and the other one was really close to the point of control. So close that I thought it would be a good idea to mark both levels, since they are pretty far away from each other, despite both being important within this price range. Therefore, I marked both of the point of controls, so to say. And if you look at the lower one, you see that price recently moved into that point of control, but then went below it. And this happened twice. So it's something to take into account, that if price moves again within this area between the point of control and this daily level, it's good to see how it develops on the lower time frame, and perhaps to even close when it looks like the same movement is going to happen. And if not, if price did go or does continue to go into an uptrend, you can look at the next point of control, since probably this fair value gap will be filled, especially with the volume imbalance being present on the 8-hour time frame. So you can look at this point of control then, and ideally, of course, you can even look at the upper boundary level of the range. The last 2 commodities to check for today are soybean and cacao. If we first look at soybean, again, as for the other commodities, there was a huge uptrend from the end of last year until now, due to the conflict in Russia and Ukraine. And if we look at the way price moved from 3 months ago until now, we see that soybean moves in a range that's particularly interesting for us. If we look at the lower time frame, we can see a few things that are interesting. So the lower boundary would be this weekly level, although there are equal lows to take into account. And on the upper time, or on the upper boundary, we also saw this daily level as a possible resistance, and these equal highs were formed earlier. And now what we see is that it looks like liquidity was grabbed above this daily level, and price moved away quite extremely. It pushed down below the daily level and back into the value area, even touching the point of control. So these fair value gaps are already filled, as you can see. And this fair value gap is something that's also interesting to look at if you decide to go for a short on soybean. So it even has a volume imbalance. Let me see. And if you decide to wait for a long on soybean, one of the more interesting places to check for a long could be on the value area low, although you should be careful since it didn't went up that often. It did went up twice around that level, but more often than not it continues to go through it. But the even more interesting place would be for the weekly level to look for a long, but to also have these equal lows in mind, because these equal lows can be taken out before eventually going up again. And lastly, we look at cacao, and we see that cacao moves in another larger range as well. Also explained in another public analysis. And if we look at the more lower time frame, then we see that after the strong low that was marked earlier, that cacao moved away with conviction, broke these swing highs, as you can see, and it looks like a local resistance since it moved down from here as well the last time price visited this level. Do keep in mind the fair value gap that's above this place. So although this can be seen as a small range, I do not look for it to trade at all, simply because of the fair value gap that's above it, and also since there was an uptrend present on the lower time frame. This was the end of the video. I hope you guys enjoyed it and learned from it as well. Please press down the thumbs up, subscribe. This was the end of the video. I hope you guys learned from it and enjoyed it as well. Please press the thumbs up, subscribe, and turn on the notification, so I'll see you guys in the next video.